And now, with the latest business and market news, it's over to Jane Edwards.
Thanks, Alan. Wall Street showed some resilience on Friday with a late rally capping off its best week in 3 months, despite the release of some extremely disappointing job numbers. The Dow gained 20 points and the Nasdaq added 0.5%. November payrolls grew by an anemic 39,000, more than 100,000 less than expected, and the US unemployment rate edged up to 9.8%. It was deflating news for investors who earlier in the week celebrated bumper November retail sales and an easing of euro debt concerns by boosting equities markets. The greenback slipped again on the jobs news, taking the Aussie dollar above 99 cents, while gold came back into fashion and jumped above $1,400 an ounce. The oil price also hit a 2-year high, close to $90 a barrel, thanks to a cold snap in the Northern Hemisphere, which is driving demand for heating oil. It piled on 7% over the week. Looking at world markets, all were comfortably in the black, with the US leading the way with a 3% gain. Now to wrap up local shares, here's Tom Elliot.
Well, as you just heard, the market was extremely volatile this week. We had both down days and up days. Of course, the up days won out, with the overall market closing up around 2% for the week. Banking was in the spotlight, and not for always the right reasons. Now, one of the nation's largest banks, National Australia Bank, had all sorts of payment problems. Now, the stock was stronger during the week because CEO Cameron Klein said the payments issues had been sorted out. Some of the queues I saw inside NAB branches might suggest that isn't quite the case. Turning to smaller banks and, of course, credit unions, Federal Treasurer Wayne Swan has come out and said he wants to create a fifth pillar in the banking world, that the federal government might assist smaller financial institutions in their fundraising so that they can compete successfully with the bigger banks. Perhaps unsurprisingly, the share prices of Bank of Queensland, Suncorp and Bendigo and Adelaide Bank were also stronger throughout the week. The October retail sales data that came out was disappointingly weak, and this points to a rather bleak Christmas coming up at the end of this month. Again, stocks like JB Hi-Fi, Myer, David Jones and Kathmandu all saw their share prices fall during the week, although Harvey Norman broke that trend and managed to gain a couple of cents. In small cap land, and in particular takeovers, the battle for Impress Energy took a rather interesting turn. Now, Beach Petroleum is its major shareholder. It's got 20% and it's launched an 8.25 cent recommended cash bid. However, another big shareholder, Victoria Petroleum, had 10% but increased its holding on market to 20%. We'll see how that one works out fairly soon. Perpetual is another stock that's under takeover bid by private equity group KKR. What's interesting is Perpetual shares are still trading well below the value of the bid, and the rumour is that due diligence by KKR hasn't even started because the two sides can't agree on price. And because this is the last show for 2010, winner of the year is Intrepid Mines, up an astonishing 608% after some excellent gold and copper mineralisation deposits at its Indonesian project. Loser of the year, however, is Photon Group, down 96% after an extremely dilutive capital raising several months ago.